Is this what you expected?
Not really. I mean, obviously, at the end of the day, we, respect the fair market value, but all I want is a healthy stock that doesn't actually gyrate too much high and low. So looking for the true health of the stock itself, where it lands.
After everything that we've been through this year and last with all the valuation concern and, there were concerns that you would have the effect of a down round here based on what your valuation was in 2014. What do you think is going on here when the public markets, at least in this initial day, are valuing you this way? Does it say anything about the valuation conversation overall?
I think investors who are educated, who have read our S1, our prospectus, they'll look at us differently. There's a tectonic shift going on in the world of computing. And when they look at our net promoter score or repeat business, I think they've done some well-informed decision making here. But at the same time, there's obviously a lot of mob tendency about, bucketing companies and talking about the highs of the unicorns and the death of the unicorns. So there's a lot of that yin-yang that actually goes on.
So analysts who look at you guys, of course, say that you're the real deal. Gartner, for example, has you as a leader in their magic quadrant that talks about folks who are going to do well in cloud and this hyper-converged infrastructure area where you are. But I got to ask, explain the Dell relationship, because it looks like they account for around 25% of your sales. They're been a partner of yours, but now that Dell includes EMC and VMware, they're also increasingly a competitor of yours. So how do you expect that to play out? On the one hand, they say they're going to continue working with you because the customers want you, but on the other hand, there's the concern that you'll no longer have that most favored nation type status.
Well, two things. One is that 25% number is wrong. In terms of revenue, that number is less than 5%. And in terms of billings, it's the number is not as high as 25, it's less than 15. So I think that's one. Obviously, we have a lot of respect for Dell, and Dell, vice versa, has a lot of respect for Nutanix as well. If anything, they've actually chosen three computing partners, operating system software vendors. There's VMware, there is Microsoft, and then there's Nutanix. And I respect what Dell has done in the last 15, 20 years of delivering choice to the market and respect the customer's choice. So we hope to actually see more of that going forward as well. So again, going back to what the outsiders see as everything being a zero-sum game, it's not as simple as that.
I wonder what your take is on investors' expectations for profitability, how that has changed over time, and how you as an executive treat cash flow and investments differently than you might have 5 or 10 years ago.
Yeah, I mean, every year we've actually put more guardrails in our business. This last fiscal year that ended in July of 16, that was fiscal 16, and we were operating cash flow positive. And then, every year we'll actually apply more guardrails and say, look, growth at, something that's actually more measured as opposed to growth at all costs. And I think the market keeps us honest. Obviously, they realize that there could be a lot of wastage in the name of growth. And as the company grows larger, we have to be more mindful of what wastage means. And I think it's going to be a pretty healthy balance between, taking care of our customers, our employees, and our partners, but also making sure that we have some, checks and balances built in.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.